Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 13th of April, 2026. We had obviously the big peace talks over the course of the weekend. They came to no fruition, basically. We now have a blockade from both sides on the Strait of Hormuz. So that's obviously not very good for prices at the pump, and oil prices generally have headed higher this morning. I think we're around the 105 mark or just below in WTI crude. We've seen gold and silver drift or get hit 2% and 4% respectively. And we've got the S&P and the Nasdaq down around about the 1.2 to 1.5 mark. We essentially are now at 42, or if not 43 days, I suppose, by the end of today, in terms of resumption to normal. We had those two days of ceasefire there, but we're starting to see these attacks creep in again from both sides, and essentially, we've had, I think, there's been ships moved on behalf of the US in terms of them trying to now blockade the Strait of Hormuz. So here's a bit of a timeline. They had like a marathon 21-hour negotiation session. Look, the US's non-negotiables were end all enrichment, dismantle facilities, Strait of Hormuz, surrendered. End proxy funding, etc. Iran, they want sovereignty over Hormuz, the right to peaceful and nuclear program in regards to nuclear power, not to nuclear weapons. They've already conceded that they don't want nuclear weapons, and they will stop funding proxies like Hezbollah in Lebanon if Israel stops strikes on them. So there's some positives and negatives here, because this is at the end of the day, this is the first time these two sides have met in person since 1979. So that's a positive. There's a lot of chest beating, a lot of saber rattling, etc., which you would just expect for these situations, but there is no date set for the next round. I think it really does depend on the 14th, which is tomorrow of April. We do have Lebanon and Israel going to the White House for talks. Hezbollah has not been invited, so I don't know how fruitful those talks will be. At the end of the day, like, I'm doing my best here. I'm not a diplomat or a diplomatic expert. Like we're just trying to track this from a market's perspective. Pakistan's continuing quiet diplomacy, but I think that they've now played out their role. That Trump's genius move getting to the table is a first in 47 years. I guess we need to see. There's no ceasefire on the agenda with the State Department ambassadorial level for these Israel-Lebanon talks. If we can get some progress there, we may get some progress in the broader thing. And until that point, we just these non-negotiables at least are not 10-point lists anymore. They're kind of three key points essentially. If we can get to agreement on there being no tolls from either side on the Strait of Hormuz, and we get that strait reopened, if there is probably just a softening of sanctions against Iran, and they're allowed to let in inspectors and pursue nuclear power. Not that I don't know why they would necessarily need it, given they're in such an energy-rich country. But we are significantly closer than what we've been. So that's the hopeful side. The non-hopeful side is the saber rattling and the really heavy comments from both sides. And the bad thing is this doesn't seem like it's going to end anytime soon, and we're going to get that days to normal oil supply probably wind out. What are we, the 13th now? So there's another 9 days. So it's probably going to be in the 50s, because I dare say the ceasefire, unless it's really badly broken by either side, which I'm assuming it won't be until these Israel-Lebanon talks are done, If they break down really badly, then you may see a real break of the ceasefire, and then it's just done. But then I would just say that if there is some promise there'll be threats from either side for the next 9 days, and there'll be unlikely to be any progress. So that's probably where it lays realistically. This was Friday night leading into it. The chip names and Amazon and a few names were a little bit high, but we were generally a little bit lower. CPI was 0.9. We're already seeing energy really affect, for the month, which is the highest since 2022 in terms of inflation. So it's already starting to affect the US from an inflation standpoint. And the Iranians have already poked the bear in terms of the US and saying, I hope you enjoy $4 gas prices now, because it's going to be $5 gas prices. So it's a little bit childish, considering we've got two megalomaniacs on both sides. Whoever you want to side with, it's affecting the everyday people, and we'd all just like to see this end, and in some form of reasonable manner. I would expect that these technicals will now turn around, and we'll probably head lower. It'll be interesting to see. The US markets had a real buy the dip attitude. It'll be interesting to see leading into earnings how they're going to polish this turd tonight, because oil at 105s is not good for the economy over there. And let's not forget the fact as well that there are some other things bubbling under the surface as well. It's come out that Anthropic's intention not to release their Mythos or Capybara model, just because of how efficient it's been in spotting vulnerabilities in code, has now been escalated to Treasury Secretary Besson and the Fed chair summoning all the heads of the major banks in the US to a meeting on Tuesday night, and everyone being forced to basically put their software through this sandbox to see where there's vulnerabilities. So the regulators starting to get their teeth into AI from a broad aspect as well, and it was always going to happen at some stage. But we are, realistically, we will have to see what the effects are. There are reports around a lot of these data center projects that were announced last year. They're up to half are being delayed or cancelled because they can't get certain parts, mainly switches and memory and the things internally. Even on a backlog. So we may see a bit of a reversal there. I mean, this is what I've talked about for a long time, is like there is the market that embraces those announcements, etc. But the reality is that we human beings and the actual real economy can't work at the pace that AI and investors expect. And when these large capex programs go on, these paydays aren't instant either. So we may start to see a little bit of premium be taken out of things overall, because there's no point having a backlog of Nvidia, and buying your Nvidia chips and all this sort of stuff if you can't get the switches and you can't find the data, and you've got no data center to put it in, or you don't have the power to power the data center. So all of these great bits of news that have been fantastic in a theoretical sense and will definitely play out over the next 2 to 3 years. The difference between Wall Street expectations and investors' expectations that you just knock up a data center and all the parts will magically appear, and the reality of actually doing it, there is a very wide gap there. So look, when this is largely now irrelevant, I suppose, because this is now up 8%. This is from Friday. I think we'll start to see the massive risk-off sentiment go through the market, at least for today. And then we've got nothing really out tonight. We've got the banks reporting earnings this week, and it'll be very interesting to see how the software guys go. It'll be more so in May when they start to report. and see how their if their earnings are affected. So you've got to think about the fact that Anthropic has gone from a 9 billion expectation run rate of revenue back in February to 30 billion in March. That's a steep increase. We may not see where spending is cut elsewhere on this earnings, but we'll probably have to look at outlooks, but because it'll be too soon. Most people will have 12 or 3-month contracts, etc., on their software agreements, and for large organisations, it'll be way too fast for them to be able to. So they'll be buying, they'll be funding both at this point in time. But that increase to 30 billion, or that tripling, or more than tripling, is will have to come out of budgets somewhere else, and it'll either be in the form of employees in wide scale sackings or layoffs, or it will be in scaling back other softwares. So it'll be be interesting to see how that plays out over the coming couple of months, or the coming couple of earnings seasons. We do have PPI this week. We've got Australian unemployment. There were minutes from the Fed last week, which was surprisingly hawkish. That CPI number is not going to help on Friday, and the Strait not being reopened is also not going to help. So we expect there to be conversations around inflation, or potentially stagflation in the coming weeks. So yeah, but overall, you're going to have we are around those record highs. The equity market is really sticking out here at the moment, only 4% from record highs. Now is a really good time to be reviewing your portfolio, because the horse hasn't bolted as yet. If this gets worse, you'll be thankful that you've done a portfolio review. You scan that QR code, or the one behind me, and we can run it through our new software here called Prism. And run you through. It's the smart thing to do here at the moment, and try to batten down the hatches just in case this does escalate, down the line. So have a good day, people, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.